Traders, welcome back to the channel. We're going to the SP 500 and Nasdaq 100, exactly how we're moving the charts and everything you need to be looking at. Before we get into that, I recommend liking and subscribing. It helps out the channel tremendously, and I'm posting videos every single day, so you know exactly what we're looking at. I'm trying to be unbiased as possible, but I have to give you my honest opinion in the trades that I'm taking every single day. Let's get into it. So first thing we're going to do is hop into the S&P. And we're going to look at SPY specifically, and I'm going to look at futures here in a second. Now, there's something I want to show you on the S&P with SPY specifically. This has been your trend over the past week or so. So this is the past 3 days roughly. You are trending essentially from 373, I assume more 374, to highs of locally 378. This looks shockingly similar to some of the price action that we saw back here. This was the same type of range type trading we were getting, and I want to just highlight the key areas once again that you were seeing here, and it was the same type of action, up and down, up and down, up and down. Now when we come back over here, you can look back at the S&P and you can see it's doing very similar, except you're only into 1 week of this. Do I think it's in the last 2 weeks? No. I want to make that very clear, but you are getting a lot of chop in this range, and this is, if you want to say, some of the most difficult things or ways to trade right now. This is really where people lose money when it comes to day trading. This is the hardest area to day trade because it's just up and down, up and down. You're not getting any clear breakout movements. That's what I say when you get a clear breakout to the downside or to the upside, that's where you want to take advantage of the movement there overall. We're going to go over some of the plays that we've been talking about here because there are plays that are breaking out right now. But looking at the S&P in general, you need a breakout and hold of 379 for upside pressure, or you break and hold below 373, 374 for downside pressure. So far, you're getting some quick wicks, but nothing is holding down below. And then the one close we did have below it, we actually ended up gapping down and getting right back into that range. And then we've been sitting overall in this trend. So that's what's going on in the S&P. I'm still expecting downside. However, based on what's happening now, you just have to wait and see where it breaks out. So I'm going to still stick with my overall viewpoint of I expect more downside based on volume, based on VIX, based on all the other indicators. Those things point to more downside for me personally. But again, the safest thing to do is either wait for a breakout to the upside or a breakout to the downside, because then you're going to have a clear-cut direction and it's going to be the most profitable type of trade, right? So if you start to break up, you mount above that level, trade it to the upside right there. If you break down, you break below, retest, trade it to the downside from there. It's exactly what we did back here. And guess what? Everyone on the channel made lots of money once you held below 407. It was the easiest trade that there was right there. So this is kind of what we're sitting in. The one thing that does look a little bit different here is when you look at QQQ. Now QQQ, it's the Nasdaq, basically the version of S&P futures, but for the Nasdaq. And if you look at what's happening here, you are sitting in the same type of channel, if you will. If you go back over here, you can see Nasdaq or Qs were sitting in the same type of channel where you would come up and then you would come right back down to that level and then just back and forth, back and forth. But I will say this time, Qs look a little bit more interesting. They look a little bit more bullish. You are making those higher lows. You are trying to push up. That's a very good and very bullish factor there. So that's one problem with my thesis of downside, is that Qs do look different from our past trends that we have had. So if Qs start to mount above the 285 region, you're looking really bullish. If you stay below this region, again, you continue to stay in the chop and you are looking for more downside. I would normally play the break of a lower high made here. So if you start to make a lower low here, I would want to trade that to some downside. However, I'm going to wait for the S&P futures primarily. Now, that's what I'm looking at here. Now, we've also talked about some big plays. And before I go into any more about the futures and what I see happening going into tomorrow and the big news there, I want to highlight some of the plays we mentioned. One, John Deere. John Deere broke below 307, which we mentioned in the previous video. Guess what? You went straight down to 297, and it's looking like you're going to start taking a big dump down to 270 as well. That's a really big play there. John Deere's definitely slipping as well. So going over to Caterpillar, I didn't mention this, but it's the whole sector of what John Deere, it's industrials, right? It's XLI, that's the ETF if you're interested. These are all getting hit very, very hard. This is a very eye-opening thing too, because these have been some of the safest plays overall if we go and look back. So looking at Caterpillar, just a really quick look of how you've moved over the past year. Even with the quote-unquote recession that you are facing and coming up right now, I mean, you've held up very strong in comparison to something like the S&P. Cat's just now taking this drop right now from the highs of locally around 230 in a very big hurry as well. From overall the 8th of June till right now, you're taking a massive, massive drop. And this is where it's leading to me to believe that more sectors are getting hit and you're leading into that type of recession. So that's what I'm looking at there. John Deere, big play. Hope people got to trade that. Congratulations if you did. Going into indexes, what I see happening going into tomorrow, what am I looking for? I'm going to be very transparent, very honest with you. You're facing quite a bit of risk at this moment, taking too many trades. Now, personally, I do have trades open. I am okay with that risk. And the one trade I am trading right now is CarMax, and that's for downside going into those earnings. But looking out here again, the safest thing to do is going to be to wait for any of this price action to occur. The one thing to look at too is looking at VIX. You're trending at $29, $30. Yeah, you've gapped up, you came back down, but locally you're just trending. The higher you stay up here, the bigger the probability is for downside on the S&P, and you're just trending at 29. If this does break down, I'd be more bullish and expect that upside break. But as of right now, as we look at the SPY, we are expecting to just sit and chop in this range. You're even getting a little bit of rejection here on the after hours. So I'm playing this by ear and watching how we open. The next indicator I want to talk about is the JNK bonds. Now, something we were talking about yesterday was how you were just consistently coming down on yesterday's move. And as you can see, boom, coming just straight down. What happened today, though? Things got a little interesting. You're pushing back here, and you are sitting at this cusp of this pennant right now. The same type of action that did happen back here. So if JNK starts to break to the upside, I will have to start looking for a more bullish behavior or some type of bounce across the board. These are things you have to be looking at. So I am looking at the same type of movement. If this does start breaking back up and risk on comes into the market, I will have to start taking some risk and playing for more upside pressure just based on these indicators. The 10-year yield is also coming down as well. So you were seeing a lot of downside. You're still sitting very high at local ranges. So you would probably see just about a week's long of upside. The upside that we've seen right now, in my opinion, is just a lot of chop. There's been no real bounce. If you're looking at SPY, you haven't really got any recovery. You saw a little bit of a bounce, but this is not a bounce in my opinion. This is more of a bounce, more of a retracement here. So you could see upside maybe up to 394, 390, but that's where I'd be kind of closing out that region to look for that end bounce right there, and then continuation for more downside. But these are all things that I'm looking at right now and how I'm going to be playing this market and how I'm going to be watching us coming out of the gates tomorrow as well. But as of right now, no positions to the upside. I'm only trading some of these positions to the downside. I have CarMax, and then I also have a GS Goldman Sachs put as well, a little bit dated there. Going into this as well, you need to know with the calendar going into tomorrow, you're getting your consumer expectations and your inflation expectations coming out of Michigan for tomorrow and new home sales. These will be movers on the market, so we need to see how these come out, and I'll give you the latest update hopefully on Saturday. That's what I'll do the next video. I won't have a video dropping tomorrow, so be on the lookout for that. This will affect the market right here. So this is pretty big coming out of the gates tomorrow as well. Then as we come over here really quickly to look at the overall call to put ratio, you can see put to calls. There's still a lot of puts being dominated here on the market. You see almost a $4.5 million put coming in right at the end of the day. And then you can see on Qs as well, the same type of flow, but it's a little bit more bullish onto the Q side. We can even take a look here at VIX as well. And you can see a lot of calls are coming on VIX. People are expecting VIX to continue to rise. These are things you need to be looking at right now. As we go over to Bookmap, you can also see something very interesting here as well. Today was extremely interesting in the fact of how we moved in general. I don't even want to look at the iceberg orders there. All I want to do is take a quick look at the overall volume here. There's green and red right here represents volume. If it's green, that means buyers have more control. If it's red, that means sellers have more control there. Now you can go down even with this being green. That's important to know. So you started to trend back and forth, and you were just kind of sidelining, moving back and forth through that chop. And then near the end of the day, going into power, this started really ramping up. And I figured you'd start to kind of slip down, but you actually continue to run up with more and more volume. This was extremely interesting at the end of the day, but overall, you didn't break any key levels, even with this massive spike in the CVD and the volume there. That left me with a little bit of concern for more upside positions there as well. You would have really liked to see a break and hold at the end of the day of that range with that accumulation of volume there. So that's what I'm looking at. But overall, looking at this, there's no clear-cut direction either way. It's really how you're feeling based on the technicals, how you're feeling based on the fundamentals, and where you see us going from here. But as for me, I'm expecting very similar movement that we had back here and an eventual break back towards the downside. But again, I have to be very clear. If you hold above this region, you hold above that supply level, guess what? We are expecting more upside. So if you get above this level, you play the upside. If you get below this level, you play the downside. It's as simple as that, and that's how I'm looking at the market.